So there's this big dichotomy right now between what the economic data says and what the markets are saying about where we are in the current economic cycle. But here's what you need to know before the bell this morning. The market yesterday hanging on by its fingernails. Now, we talked about this break of the 200-day moving average. We broke it yesterday, got back above the 200-day moving average. And this is what I was talking about previously, is you've got to be a little bit careful of that initial break to make sure that it's actually going to break. Again, we were oversold and seeing a little bit of a bounce here, not surprising. Now, again, the market's going to open a little bit weak this morning because of the Google earnings announcement. We'll see if that stays the case all day. We've seen some days recently where markets open down and then we get a lot of buying into the day. We've also seen other days where the market opens down and stays down. So, how the day ends, we don't know, but we're wrestling with this 200-day support right now. The market needs to try to hold on to that. We'll see what happens, by the end of the day. And again, as I said, what's important is where we end the week. So if we get to the end of the week and we're below this 200-day moving average, then that's something that we'll have to take a stronger look at heading into next week, of course, the end of the month. But if we start to take a look at the S&P, and then let's kind of shift through some other sectors or some other areas of the market right now. The volatility index recently spiked up above 21. We've gone through a very long stretch with the volatility index below 20. Had a decent rise here with this recent sell-off, this jump in interest rates, sell-off in the market. Nice little pop in kind of fear of the market. We're now getting very close to a sell signal in the VIX, which means a lower VIX coming from a fairly high level. So again, if the VIX starts declining, volatility starts decreasing, that'll be a support for stocks going forward over the course of the next few weeks, because a declining VIX, less fear in the markets, will bring buyers back into the markets. Again, there's that big short position sitting against stocks right now as well. So keep a watch on that. We're not, not grossly overbought, not oversold either. So if we do trigger the signal, we are going to see potentially higher prices short term. Same thing for interest rates. Interest rates, of course, been weighing on tech stocks in particular. Higher rates don't work well on companies dependent on earnings growth. But we're about to trigger a sell signal on interest rates, suggesting lower interest rates, at least from this level short term. That would also help buoy stocks in the short term as well. Again, just kind of this correlation that we've had in the markets. Gold, on the other hand, has had a very sharp move here because of this whole Israeli conflict. That has really pushed the MACD and the overbought condition in gold to fairly high levels. So a good area right now to maybe take a little bit of profits if you're long gold, and then look for a pullback in gold prices to add back to your position if you want to maintain it. But again, you've had a very strong outsized move because of this potential conflict, and that's giving you a nice area to take a little bit of profits here. So you might want to think about that. And then lastly, if we just kind of go back to the NASDAQ itself, this is really where a bulk of the leadership is, because of Microsoft, Apple, Google, these type of companies. NASDAQ stays well above the 200-day moving average. So again, much better technical position than what we see with the S&P. It has been very oversold. We've had a nice sell-off in the NASDAQ so far this year, back from the June highs. That kind of summer weakness we had talked about. NASDAQ very oversold here. As well. So again, if we're going to see a continuation of this kind of narrow rally of these mega cap 7 versus the other 493 stocks, you would expect it to show up here. So again, we'll have a little bit of early turbulence in the markets because of the Google earnings. Microsoft on the other side being on the upside. We'll see how the market plays out today. We'll keep you up to date. Tomorrow we'll kind of see where we are relative to our support levels. But that's what you need to know before the bell this morning.